BYDFi is a crypto exchange on desktop and mobile where you can spot trade, futures trade, use leverage tokens, and copy the trades of top traders. If you sign up with the link in the description, you get a free $100 when you deposit $100. There's hundreds of crypto available on their spot exchange, as well as a free test account so you can practice futures trading without getting wrecked. BYDFi.
Hello everybody, welcome back. So FOMC coming today. Let's have a think about what that would mean. So the CPI wasn't all that bad. Not great, not poor. Basically just pretty much neutral. The markets didn't really know what to do with that. So let's just have a look at the charts then, shall we? So we'll focus on gold to begin with, because gold is at a very pivotal area on its weekly here. So you can see for the last 4 weeks we've had a 20, we've had a 21, we've had a 20, and another 20. So there's your 20 moving average, a Bollinger Band center, basically being a big pivotal area for us. Can we hold it? Usually the more times you touch a support or a resistance, the more likely it is to break. If you think about the direction that we see this in, it's basically consolidating. It makes more sense when you see it on a daily, because you've got our descending trend line basically moving further and further down. If we do come down, we do break down from the, which is this 1940 area, which is basically your 20 weekly moving average. We've got a nice big fat tasty 200 simple moving average sitting around just below 19. Okay, that's fine. What else was there? And we also have the 50 exponential moving average ever so slightly below that. So we've had decent reactions from these places in the past. It's not the most important thing you've ever seen in the world, but we have had decent reactions on both dailies and weeklies. There's your daily 200 simple moving average where you had the V-shaped recovery. Exactly as expected. I remember telling everybody about that. Well, this time round, again, gold is consolidating based around the recent dollar strength, which at the moment doesn't appear to be all that strong anymore. If we do get a pause today from the Fed, which is what the market seems to suggest is going to happen, the market's basically priced all that in. You look around the polls on Twitter, you basically look at anybody saying anything, they strongly feel that it's a pause is coming. Now, anything other than a pause is going to cause a big shot up towards 105.3 on the Dixie. And I'm not here to say what opinion based, it's TA really, but if you do want an opinion, it's probably counter to all of that. It might be a 0.25 basis point. It's not off the table, is it really? And the reason I say that is that the Dixie itself is a barometer of strength or weakness in the dollar, and we're in the dollar is in this medium zone of this giant channel that we've been sitting in for absolutely forever. No, don't move the bottom of the channel, right? And look, we can continue to go down as I expect that we will do over the coming next couple of years. This is the rinse and repeat ascending channel for Dixie. But if we get a pause right now, and ECB and the Bank of England, Bank of Japan, and all the other guys continue to raise rates at a faster rate, which is what they say they're going to do, you'll see a Dixie trickle down and break down below 100. Look, if I was the Fed, I'd thinking, look, we have not crashed the economy. In fact, quite the opposite. Everybody's been expecting a crash, and only a few people managed to, get in at the bottom, basically, including myself, Mr. Humble, Mr. Humble Pants here, and. Look, the economy is okay, and stocks are more than okay. In fact, stocks are rallying pretty nicely, with a view to even go higher than where we are right now. Not looking for a new all-time high this year, but it's looking pretty good. There is, to be fair with you, a pump signal on the weekly for the S&P. So I'm just putting it to you that there is a chance that we do have a 0.25 basis points and the Fed keep the dollar up a little bit, because the direction generally is going to be down on this channel, and all the way down to the bottom of the channel over the period of years. A breakdown from this channel will be catastrophic for inflation in the US, and so they have to think about all of this. Either way, though, 0.25 basis points is pretty small in comparison to where they have been. CPI came through, well, as far as they're concerned, more or less exactly as expected. And gold being, from what I can see, the highest correlation to Bitcoin itself, is hanging around a pivotal area. And if we do break from here, then there's about a 3% drop on the table for gold before the next major level of of support. And if we think about what that means for Bitcoin, yeah, there is an 8% drop down to its 200 simple moving average, which would be a breakdown from a descending channel, which you wouldn't expect to see. I'd expect to see this basically fanning around within this channel. And my expectation generally from what I see at the moment is something along the lines of this. So I'm just extending that 200 simple moving average on the daily to give us a where it meets the channel. It also gives us this flat horizontal as well. So in a perfect world, we're just going to be hanging around in the channel, and we will find support when all these mega supports come in at the same place, around 24,003 or 400 by the end of this month. Not much further to wait, less than 2 weeks for a bottom to be printed based on what we see here. Doesn't have to happen, but it would be very nice if it did, and extremely nice if all the markets, as they have been, generally speaking, have this correlation and symmetry throughout, and I think they still do. I still think they do. But today is another volatile day that's ahead of us, and we should expect nothing more than volatility similar to yesterday. Just another candle body of a minuscule amount, but big wicks either way. The market doesn't know what it wants to do, but the channel is pointing further down for the next couple of weeks. This is going to be the same for altcoins, obviously. Altcoins are going to get probably wrecked further and further and further until they print their bottoms, which are going to be a lot harder to find, really, I would say. Because at the moment, unlike Bitcoin has got a nice rhythm to it, and there is a channel that we can focus on. There is plenty of support below us as well, and still significantly up from the bottom and from all the entry points that we positioned ourselves in, which is still clearly in profit. So Bitcoin is still the main man. Gold, exactly the same. Dixie in the middle of its own channel, and the FOMC today going to give us which direction, how we're going to continue with this. Again, just to let everybody know, crypto is one thing, but stocks is another thing altogether. And stocks, for the most part, are absolutely heaving with profit. I mean, and that's the main thing to think about. There is no giant economic collapse. There is no super mega dump crash. In fact, if we think about where we are right now, from the absolute all-time high on stocks to where the price action is right now, it's only a 9% loss if you bought the absolute peak over here. And if you didn't buy the absolute peak and you listened to my channel and you bought that, you'd be about 21%, almost 22% up. Again, I'm not saying this to come across as awesome, but this is how I make my living, basically. I make these videos in the morning because I sit here either before the school run or after the school run to try and analyze the market, see if there's anything that I can take from this market today. And at the moment, I would say that probably just leave my stocks to run, probably leave my Bitcoin to run, probably be very skeptical with altcoins in general. And today would be a day where probably no futures trade is a wise decision. You probably could make as much on shorts as you would on longs, or lose as much because the FOMC is just a gambler's paradise, really, which is basically what it is. After today, and let's just say by next week, there should be a direction of where everything is going to go for the next week or two, until the bottom of that channel has been met for Bitcoin. And look, if for whatever reason Bitcoin decides to break out of this channel to the up, then that's a full-on confirmed breakout. If we see a closure above all these moving averages above this channel on a daily, a candle body close on a daily, then that would be a full confirmed breakout to me, and we'd be looking for a new local high to be set. And that, to be honest with you, that breakout I would expect to see within the next, definitely by the end of next month, we should be trending up by then. Don't see any reason to assume big catastrophic collapsing or dumps on Bitcoin. It's basically looking like a decent, tasty, natural consolidation ready for a breakout. We're not looking for brand new all-time highs here either. We're looking for a rinse and repeat of 2019, just slower and smaller. It's just exactly the same sort of thing. Anyway, I'm going to leave with you there. Hopefully that is in some way useful. I would certainly suggest, if you want to do futures trading today, tight stop losses. And altcoins are probably not the place to do it. Unless, of course, you're still following the XRP train, which is still the best altcoin on the charts at the moment. It's still definitely positioned in the best way. But even that had a wick from hell. So just stand back, watch and wait. The market doesn't go anywhere, and if there is a day to sit on the sidelines, it's a day like today. Because if you trade based on TA, I'm not saying that the TA is useless, but there is a demon at play today that the charts generally cannot cope with, which is Federal Reserve monetary policy. Right, I'm going to leave with you there. I've got to get the kids to school. Hopefully that's been useful. I hope you have a nice day. Take it easy.